To understand what is a stock or what is a share, let me give you a quick story. That way, it's easier for us to relate and understand the overall concept. So assuming you have a friend and he has a fruit stall. Currently, he has 2 tables and he makes 1 ringgit per table per day. Having said that, your friend wants to expand his operation and he gives you an opportunity to invest in his company, whereby he asks you an investment sum of 1,000 ringgit for 50% of his company. And you ask him the following questions. What would he do with the proceeds? So the first thing he will do is to buy machines, which will enable him to work faster. The second thing he will do is to increase tables. That in essence will help increase the number of people that the fruit stall can serve and will increase the top line of the company or the revenues of the company. At the end of the year, assuming your friend made about 100 ringgit, and since you own 50% of the company and your friend decides to pay all the proceeds to the shareholders via dividend. So a company can opt to retain its earnings for future growth or decide to pay out all its profits in the form of dividends. In this case, your friend wants to pay out everything to all the shareholders, which is you and him. As a 50% shareholder, where your friend owns half the company and you own the other half of the company, the 100 ringgit will be split half, where you will get 50 ringgit. And if we were to divide how much we initially invest in the company, we will get our dividend yields from that investment of our friend's company. So that's the first way of making money off stocks or shares, which is dividends. And amongst the asset classes which are very popular in giving dividends here in Malaysia are as follows. Number 1 is ASB. Number 2 is Amanah Saham Malaysia. Number 3 is Amanah Saham Malaysia 2 and Amanah Saham Malaysia 3. What I want to highlight is ASB is for Bumi Putras, while the ASMs are open for public at large. The second point which I would love to share is all 3 of these investments are capital guaranteed. In simple terms, for every $1 I put, even though the stock market tanks or the stock market drops, that $1 would remain the same. However, if I were to invest in shares, if the stock market were to drop, I will lose money. And I'm sure if any of your friends are invested in any robo-advisory platform, they would experience a small dip, especially during the first quarter of 2020. Having said that, if you are a long-term investor, stocks, ETFs, and also robo-advisory portfolios will eventually recover and move up. The fourth is bonds. Now, I know it's not a very popular asset class, but I know SC is creating initiatives to make bonds more affordable for the retail market. The point here to note is bonds would pay coupons every annually or semi-annually. And if we were to hold the bonds to maturity, we will also have the same effect of a capital guaranteed fund. The next are REITs, and the final one is high dividend paying stocks. These are stocks which typically are not high growth companies, typically earns a profit and give most of the profits back to investors. After 4 or 5 years having a successful operation, your friend now wants to raise more capital. And it can be done by 2 ways. The first is going into the debt market, and the second is to go through the equity market. Going into the equity market is basically trying to sell shares of your company. But having said that, it's very cumbersome to meet people door to door to try to sell your company. So to make and facilitate this activity, here in Malaysia, we have Bursa Malaysia, which acts as an intermediary between buyers and sellers. And if you decide to raise money via equity, you will go through an initial public offering where they serve as an intermediary to connect you to the potential buyers of your share. In the next episode, we will talk about how you as a shareholder make money via capital gains. In the meantime, if you found this video helpful, please subscribe. If you have any questions at all, please do ask me. Until then, I'll see you.